Hey everyone, it's Ryder from Skip. In this video, I'm going to talk about what should be the most popular funding option for every single small business owner and entrepreneur in the US. Whatever stage of business you're at, these are funding opportunities you probably should be taking advantage of. Whether you're looking for $50,000 or $5 million for your business or side hustle, these are programs that should be top of mind. These are, of course, the SBA programs, 7A, 504, and microloans. I've got data to back it up. I've got guides to share with you and important tips you won't find anywhere else. Between these three programs, I predict they're going to be the most popular funding instruments in 2023. As always, thanks for tuning in and subscribing. I'd love to hear where you're watching today's video from. Leave a comment below, and if you apply for any of these SBA options, would also love to know. And one quick favor, hit the like button. I hope these funding options are just as popular as the EIDL program, and you can make that happen if you hit the like button. YouTube will show this video to more people. I want to start with the data and why this is so important. Here's the latest SBA 7A and 504 data program. 7As are up to $5 million, but there's different buckets: $350K, $500K, and $5 million, each with different timelines, each with different requirements. So far this fiscal year, nearly 20,000 businesses have gotten SBA 7A loans for about $9 billion. That's an average SBA 7A loan size of $500,000. The 7A program is set to break records this year, and you as an entrepreneur should absolutely look at this seriously. If funding is what you need, or it can help unlock growth potential for you. With the 504 program, 2,000 businesses have been approved for about $2.2 billion. The average loan size is $1 million for the 504. I'm going to talk more about 7A today and share with you a few reasons why 7A is such a good deal. Let me go there next, but if you want more information on the 7A program, go to skip7a.com and we can help you get applying, get going with the 7A loan. I'm going to go into who qualifies on this in a minute, but on the 7A front, because we get this question asked all the time, hey, why should I be looking at the SBA 7A program instead of other private funding options? Well, a few reasons. First, it's going to be tough for you to find better interest rates anywhere. The APRs on the 7As are great comparatively. You often don't need as high of credit scores to get approved for the 7A. Again, this is dependent, but by and large, that's true with SBA funding. Not only this, but for microloans as well. Third, terms can be up to 10 years here. Fourth, repayments are monthly as opposed to daily or weekly. There's a lot of predatory lenders out there. And fifth, you do have an option to pay off loans early without prepayment penalties. Again, 7As are larger amounts, $350K, $500K, up to $5 million. I'm going to get back to those larger amounts in a minute. I want to start earlier on. What if you only need $50,000 for your business? For that, there's the SBA microloans. You must be a small business for profit in the US and have looked for funding elsewhere before coming to the SBA. That's a loose rule typically. Here's a short synopsis of the SBA microloan. Small, short-term, low interest rate loans designed to assist self-employed individuals, if that's you, small businesses, and underrepresented communities starting out in business. Borrow up to $50,000 in funding. The average microloan payment is between $10,000 and $14,000. Repayment term can go up to 6 years. You can use microloans for equipment, fixtures, furniture, inventory, machinery, supplies, and what most you use it for, working capital. So broad usage here for these smaller amounts. If you think you want to go after that smaller amount to start, of course, we can always help you talk through these options. helloskip.com/join. We can help you compare some of these options. Okay, here we get into 7A. As I showed at the top, around 20,000 businesses have already been approved this fiscal year for an average 7A amount of $500,000. I predict it's going to get more popular than the COVID EIDL program. Businesses are starting to realize these are great options. You don't need to give up equity in your company. You can really leverage these lower interest loans. It's not nothing. You're still going to be paying to borrow that capital. But if you do need funding, you've made that decision, these are great options. 7A loans, there's a little bit higher of a bar to get approved. You need to have a good to excellent credit score. When they're evaluating your package, they're going to look at a lot of information. For example, there's 3 forms listed here. Don't be intimidated by them. It's basically your personal financial statement and all the owners of the company, borrower information form, statement of personal history, and then the business info, your current profit and loss or P&L, a few months of bank statements, projections, and your business tax returns. Bottom line, if you have a business that is close to break even or profitable, you will likely get serious consideration. If you're burning a lot of cash, it's going to be more difficult to get approved for this. Not impossible, but more difficult. Underwriters are typically looking for positive trends. Does your business have a good credit history? Do they think you're going to be able to repay these 7A loans? There are faster options here where you can get approved for smaller SBA 7A loans up to $350,000. In a more compressed time frame, we're talking around a month, 6 weeks or so. Then it can go up from there around 2 months, 3 months, so on and so forth. So this does take time. It's not immediate capital. For that, there's private options. We have links to a few private lending options in the description, such as lines of credit or term loans that have quicker turnaround times, but the interest rates may be a little bit higher. To end on the 504, up to $5 million to purchase real estate, property, or long-term machinery. These are assets for your business. We helped a lot of people go after and get 504 loans, in addition to 7A and microloans. And even if you go after these and then decide, hey, I don't need this funding, I always encourage people to go after their options. You don't know what's out there unless you dig deep a little bit, find out what exists, apply for them, see what offer you get back, and then you can decide, hey, I want to take that. Or actually, I just won this grant. I don't need this SBA microloan. All things for you to think about. To answer one final question we hear quite a bit, this is related to if you're looking for smaller amounts. If you only need $10,000 or $20,000, is it still worth going after an SBA microloan as opposed to just applying for grants? The answer is yes. Of course, we encourage everyone to be applying for grants. That's a lot of what we do. We want to find opportunities that we think you can benefit from that are good programs, but grants are competitive. That's free money. The odds are low. You don't necessarily control your own destiny. It's someone else that's reviewing your application. And to some degree, they're lotteries. On the flip side, SBA microloans, you have control over that. You can control the inputs to your application that will get you approved. So if you really do need cash, you don't mind taking on loans that have low interest, not a bad idea to seriously consider some of these options. Again, skip7a.com to find out more, especially when it comes to the 7A program. And let's try to get this as popular as the COVID EIDL program. I know we can. There's a lot of other great programs we're talking about soon, such as the SSBCI program. That's $10 billion, also available for low interest loans. And of course, the employee retention credit that many of you have already received refunds for. If you haven't, go to skiperc.com to check eligibility. Most importantly, stay well, stay healthy, and I'll see you in the next video.